Hello and welcome everyone. We're looking at the Swiss yen on the 4-hour time frame here this morning. Today is Wednesday, May 4th, 2016. I've shorted this pair following the break and retest pattern that's formed right here. All right. Now this was a level of support right here. The market moves back away and then breaks through with a large body candle here. Okay, that further emphasizes the significance of this level. All right, there was a nice little break check pattern that we actually shorted right there, took profit, and now the market is back at this level, given another run, which failed. Okay, so this is a bearish spike candle right here, testing this level. What happened also was right here, there were stop loss orders. Okay, right here, there were stop loss orders. Anybody that thought they missed this move and they saw the market begin to fall off a second or third time, they started placing their stop orders and shorting the market. That's when the banks swoop in, take the stops, and off we go to the downside. Okay, so right now we're just seeing a little bit of a pullback, perhaps another fake out before the real fall in this market. However, my strategy is such that my 2 times profit target is at, or in this case above, the most recent bounce. All right, that way when this level is retested, it doesn't matter if we springboard back to the upside, because as you know, the market moves in a sinusoidal fashion, and it's a sine wave rather. So it goes up and it goes down, and then it just slowly makes its way in one direction or the other. However, you can rest assured that before it moves, it tests these levels just like it did here. Okay, before it goes down any further, it has to come back, take the stops. That's what strengthens the market. Okay, welcome back. Our 2 times profit target was just reached a few moments ago, and I would like to just recap this setup here, the break retest, for you guys, so you can understand the significance of what makes the market move, and hopefully just you can start putting two and two together and have some inside, maybe a different view of the market, maybe some insight that you didn't have before. Okay, so let's talk about first off the candle signals. Okay, that's what I like to use. They represent, for me, I like to use them for reversals, which is what they're originally intended, and what they're good for is to signify a reversal or change in the market through rejection of a level. Okay, so that's what we do. That's the first step. Second step is it happens at a level. Where is the level? The level is defined by an area of liquidity. Okay, how do we get an area of liquidity out of the market? Well, here's what happens. There's a bounce that occurs first. Here's your bounce right here. When the market returns to this level, investors are looking at this level to enter some type of a position. You have breakouts, you have reversals, you have there's an infinite number of combinations of what people and investors have put together in their head and their mindset of what they're going to do when the market returns to a level. Okay, and you know that as well as I do. I don't have to go through all the different possibilities of whether they're going to take a short or a long, or if they wait for it to break through 3 pips and then they go short, or they wait for it to break through and then pull back and then they take the long. It doesn't matter. It doesn't matter whether they're buying or selling. They are creating a level of liquidity. Now, we don't guess, and I say that by, what I mean by that is I don't wait for the market to touch a level or do something like move through it 3 pips and then take the short or the long. Okay, I wait for the signal to form and complete the pattern. In this case, we have a break check. All right, we shorted this, and there are different targets based on which pattern that we're entering. Okay, that's all in the members area for free. You can learn the quick 1-2 of how it works. If you want an in-depth look, you're going to have to join the member section, which is currently still under construction. It's coming soon, so watch for that in the next few weeks. Now, the break check, when that forms, it's complete. Okay, I'm not guessing. It happened, and now we're going to trade it. The market already showed us. It showed its hand. It told us what's going to happen next, and in this case, it's going to fall off because of the sheer way that the market moves, and that never changes, okay? And why does that never change? Because the psychology of what traders do when the market returns to a level of liquidity. Now here's what happens next, because we are in fact talking about this break retest and not the break check in this video. What happens is, as the market fell off right here, all right, everybody wants to jump on this bandwagon. So what do? They wait for a pullback towards this level and they start shorting again, and they put their stops wherever, right here, or they maybe after this, the lower close right here, then they put their stop here. So they've sold, and they have stop orders. There's liquidity being created. As we progress along this timeline, the more bounces off of this level, the more stop orders that you're going to get here, and the more sell orders you're going to get created here. All right, until finally you have this huge push through the level, takes all the stops that were created from all the short traders. Okay, it also creates another type of fake out. If you think about this in terms of how did this candle appear to you as it was breaking back through all of this level. Okay, think about this. Here's a bounce. Here's a lower, or I'm sorry, a higher low than here. All right, we have a higher low. The market fails to touch this level when it retraces. Okay, another bounce. Here's another higher low. Okay, so there's higher lows, large body. Okay, now this appears to me as a large bullish candle at some point, because it did open here, and it did at some point reach this level. So this was a large white bullish candle. When that happens and you have a higher, it's preceded by a higher low like this and a bullish candle, everybody that perceives this to be a move back to the upside, they're taking on positions, okay, as well as all the positions that were open with stop orders along here. Those positions are getting wiped out. All right, so which they're in fact positions to they sold, so it's an order to buy back. Okay, so these are open positions, if you will, the new positions here, and the market falls off. Okay, because now the banks have collected orders and this area has been hit. And if you watch the market, it moves in such a fashion that these areas are created, levels, they're hit, and then the market moves one way or another off of them, possibly takes out another level that was a bounce, and then moves to the other direction. And it okay, so over here, here's a bounce, and this level is hit. All right, we move back up. Okay, this level's hit. If you shorted this level's hit. Then we move down. Okay, we move back up. This level's hit. All right, from this bounce, this level is hit right here with these three candles, and then the market moves off of it. That's how the market moves. So don't get caught up in chasing a trade, is what I'm trying to tell you, and having your stop hit here, and during such time that this is a large bodied candle, you're taking on a new order in the form of a long position with a new stop that's going to get stopped here. You have to follow the levels of liquidity and the patterns and the signals that form that tell you what's going to happen next. Okay, in this case, it told us that the market was going to fall off. Where's it going to fall off to? I don't know. I can't be for sure. However, I do know that I'm going to take a 2 times profit, and I'm going to do it at the most recent bounce, because that is the highest level of probability of where the market is going to go to next, and take orders, create liquidity here at this level, right? This is now a level of liquidity. Where's it going to go next? As it creates more and more liquidity here, it's possibly going to go to the upside, it's possibly going to continue to the downside. I'm going to wait for the market to tell me what it's going to do next before I take on another position, okay?